By law, most people are required to file tax returns every year. The only people who aren't required to file annually are those with a gross income of under $10,000 if you file as single, or $20,000 if you file as married filing jointly. You're also exempt from this law if you made over $400 of self-employment income, or you sold your home during the tax year. If you're legally exempt from filing an income tax return, consider filing one anyway. Low-income earnings of at least $2,500 are eligible for an earned income credit. If you're entitled to this credit, you're likely to receive a refund, even if the credit is more than what you paid in taxes throughout the year. There's no risk to filing a tax return, even if you're legally exempt from the law. Despite the federal law, many people don't file their taxes on time, and one missed tax deadline can easily turn into 2 or 3 or more. While late filing commonly incurs a potentially costly penalty if you owe the IRS money, you may be surrendering a refund of overpaid taxes if you miss more than 3 annual deadlines to file your return. For example, the filing deadline for your 2018 tax return is April 15th, 2019. Despite the federal law, many people don't file their taxes on time, and one missed tax deadline can easily turn into 2 or 3 or more. While late filing commonly incurs a potentially costly penalty if you owe the IRS money, you may be surrendering a refund of overpaid taxes if you miss more than 3 annual deadlines to file your return. For example, the filing deadline for your 2018 tax return is April 15th, 2019. If your 2018 return isn't filed by April 15th, 2022, any overpayment of taxes you made in 2018 will be forfeited. No late penalties will be assessed, but no refund will be issued unless a tax return is filed for that year. If the IRS suspects that you will owe money for taxes, but they haven't received your tax return for that year, they will file a substitute tax return on your behalf. The IRS refers to information received from your income sources to determine how much you owe in back taxes, but they don't take the time to note deductions that you're eligible for. Filing an amendment within 90 days of the substitute return allows you to include deductions, credits, and exemptions that apply to you, which brings down your taxable income. Once a substitute tax return is filed, the taxpayer has 90 days to file an amendment to the substitute return. Seek out the help of a tax relief professional to help maximize your deductions and file the amended return before the 90-day deadline. Once received, the IRS will notify you of your tax debt in writing, along with a due date for payment in full. The tax amount due will be including any applicable penalties and interest that may have accrued on the debt. Interest rates may be as high as 25% and are dependent on how late the return was filed. If payment isn't received in full, the tax debt is transferred to a collection agency. If you're preparing an amended return on your own, it's important to keep in mind that tax law varies from year to year. Be sure to prepare your amended return on tax forms appropriate for the year that you're amending. After downloading the appropriate tax forms, you can find instructions for filing the amended return and the address to mail it to on the forms. Although electronic filing is an available option for current year filings, amended returns must be sent to the IRS in the mail. If you find that you owe money to the IRS after filing an amended return and can't pay the debt in one payment by the IRS deadline, consider hiring a tax relief professional, as well as negotiating with the IRS to set up an affordable installment agreement. It's important to file tax returns accurately and on time. But if you haven't been able to do this, it's not too late to get back on track. You may have a refund waiting for you. For more information about filing overdue tax returns to claim your refund, check out our blog,